Yo, what's up everyone? It's your boy Looney back with another market breakdown. Today we're going to dive into 3 stocks that I piled up on during the crash, and then we're going to look at what my plan ahead, because the market has been shaky the past few weeks and we're finally seeing green. Today I am up 2.5%, and the week I am up 9%. So although I am green, there's still a lot of work that needs to get done. And before we get into it, quick shout out to the Discord community. It is free to join. And then I have a premium version, which gives you access to all my trades, live calls, coaching, and courses. Links are in the description. So first up, we're going to look at Riot and MARA, or Marathon Digital Holdings. We're going to combine these into 2 because they're both crypto mining companies. And these have been invested for a while now. I've been exposed to Riot and MARA before the pump in Q4 of 2024, and I'm still invested in these, and I plan to stay invested into these. These are my exposure to crypto with a little bit of control. I have been selling covered calls when things were in the red. So the past 3 months or even month or year to date, I'm up 14% on options. I've been selling covered calls on these stocks, collecting income. Even as the stock was going down and the rest of the market was bleeding, I was able to accumulate a few bit of bucks or premium that I could use for other trades if there was better opportunities, which there were. And that's why I began to sell puts on these stocks. And I have 2 puts going on for these 2 stocks. I have a MARA $11 put, which is up 40% or $20. And then I have a Riot $5.5 put that is up 75% or $22. And I opened it on the 21st. So maybe the bottom wasn't timed perfectly, but it is pretty close to the bottom. If we're being honest, it actually might be the bottom that I timed it. Yeah, 21st. Can't get any better than that with timing the bottom. What I could have done better is maybe bought a call, but I already have 800 shares of Riot, and covered calls aren't the greatest protection against downside. And also I own crypto, which is sort of my hedge is the hedge to the crypto mining. So I don't want my crypto mining to go down, my calls to go down, and my crypto to go down. I want to have a safe space. So that's why I don't really buy calls on these stocks. I might in the future if there's a better opportunity. But both of these stocks are great, and you can see I'm selling covered calls. There's a few that might run into the money. This 8.5 one is looking good, but I had to roll a call earlier today. I believe it was one of these. I'm not entirely sure. It might be this one that I rolled. But yeah, this one I rolled into a new position because it was going into the money, which it would have. It would have expired, or I would have got a sign and forced to sell my shares, which I don't want to do. I think there's some more upside to these stocks. And moving over, we're going to go to the next stock, and that is SoFi. So SoFi is a fintech company that has been making massive waves. They're an online banking that is a one-stop shop. They achieved positive revenue, and they continue to outperform. They have earnings coming up on the 29th of April. And I'm very excited to see where the stock moves. Year to date, this stock is down. It got hit with the crash, the rest of the crash. But I built up on it. I really stashed up on this stock. I have 400 shares now, and I have a buy call option. And I had another buy call that I actually sold for profit, but this one is still bleeding because I bought it sort of at the top, sort of a bad timing with buying that call. But this one has a lot of time to go. And I'm also, because it is a long-term call, it acts as if I own the shares, and I'm able to sell a call against that. Basically, it is called a poor man's covered call. you get to own the shares for a lot cheaper than actually owning the shares. And I'm also selling covered calls on my shares, that 400, but that's why I'm able to do 5 contracts, even though I only own 400. So it's pretty interesting. I'm positive on SoFi, so that's really good. Whereas Riot and MARA, I'm still in the red. So that's why I'm selling puts in case the stock decides to go lower. I get my cost basis down. But this one is definitely a long-term play. And I could see this stock hitting $25 in the next 5 years. And it's just a great stock, a great investment. It takes up about 15% of my portfolio. So I'm going to be holding off on selling puts on SoFi, at least for the short term. And lastly, we're going to go over a stock that I don't really go over, and that's because it is a small position in my portfolio, but I'm hoping to really load up on it, and that's Hood. So Hood is the app I'm using, and they're very similar to SoFi. They're a competitor, you could say. They're not necessarily a bank, but they're pretty much at that point, they're competing with banks. So Robinhood is the app I'm using. They do futures. You can invest. The fees are cheap. It's user friendly. They're very interactive. They're very active on social media. And they're very control of things. They're very ahead of the wave. So I believe they're trying to get more involved in owning crypto. So yeah, they're very trendy. They always keep up with the times, and they're just a great company. They are a little volatile, but that's what you get when you have stocks like this. And year to date, it's up 26%, even with the massive crash that we saw back in early April or March to April. And this one is a great stock. Yes, I only have 1 share or about 2, and it's only 0.25% of my portfolio. But I am dollar cost averaging $2 a day, and I do see the stock dropping. I don't know. I don't think it's going to drop right now because everything's kind of soaring. So I'm only putting a little bit at a time. And plus, I'm thinking about opportunity costs. I think I can get more bang for my buck for SoFi and Riot and MARA. So that's why this is a very small position. And I thought I'd show this because if you're a new investor, this is the way you start. Or this is what I did to start, and that is dollar cost averaging. Putting a little bit every day. You only need $2 a day. That's less than buying a coffee every day. And yes, it does take time to build the position, but you won't realize it. And it also helps you keep up with the trends and just the overall market. So it actually keeps you involved, and not so physically, yes, it is good to actually own the shares, but you're in the mental state where you keep up with the market. And those are really the main stocks that I'm owning. Yes, I have crypto, and I have other stocks that I'm looking to exit, actually, either exit or acquire 100 shares. Like Sony, I am trying to acquire 100 shares. The stock just keeps going up. It's up 18%, almost as much as Hood, but let's just wrap things up. So Riot and MARA do give me that crypto exposure with a little bit of controlled risk, whereas crypto, Bitcoin, altcoins are crazy. They go up and down a lot. MARA and Riot also go up and down a lot. They're very volatile stocks, but I'm able to option trade to actually keep control of that price movement or that volatility. And I use the wheel strategy, as you just saw. SoFi is a fintech disruptor with strong growth metrics. And then lastly, Hood is very underrated tech play poised for the comeback of the century. And let me know in the comments which stocks are you loading up on or already loaded up on during this rebound or this recovery. Don't forget to like, subscribe, and check out the Discord for real-time trade alerts and coaching. Peace.